You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for Education Wednesday here on the old Options Insider Radio Network. Time for us to go deep into the mysteries and nuances that make the options world sometimes so terrifying to newcomers, but also so compelling, so intriguing, so many layers to explore. That's what we do here on Education Wednesday. That's what we do here every week on your premier educational source. Yes, Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. And, I've been joking lately, but it's not a joke. It's serious. It seems like every day we are getting deluged with yet more platforms that are either trying to jump into the podcast fray, or they want to create communities around it, or apps, or whatever it is. There's new ones. Literally every week, there are new ones listing our stuff. I can't keep track of it myself. I don't know how you folks out there are keeping track. I think we're in the midst of the third or fourth, maybe, podcast boom. Just when you thought there were enough outlets to carry all this stuff, there are more. Just saw another one popping up, hitting us up this morning. So it's amazing. It's amazing how many there are out there. So you have no excuse on the on-demand side. There should be just an infinite number of places that you can get Options Bootcamp, including all the big ones, of course. Your Google Podcasts, your Apple Podcasts, your Spotifys, your Stitchers, our mobile app, our website, two great places for a lot of you who like to mainline and go deep into the archives. Those are the two best places for you. Even YouTube, a lot of you are getting it on the old YouTubes. If you want to go above and beyond, join us live in the fun live chat there. Then, of course, head on over to theoptionsinsider.com/plus. And if you want to go above and beyond that, you want to get some exclusive content, including our great pro Q&A sessions, which I think a lot of the audience of this show would get a lot of value out of. We've had some great people in there answering all of your many questions. And of course, Options Oddities every Friday, breaking down unusual activity. The optionsinsider.com/pro is the place to go. And of course, on the Options Bootcamp show, as always, joining me on the Options Bootcamp drill instructor proving ground, the black-hatted one himself, Mr. Dan Passarelli, the founder of Market Taker Mentoring and the author of 1 or 2 or 47 options-oriented tomes. Mr. P, welcome back to the show, sir.
Hey, it's great to be back, Mark. Got some good stuff to talk about today.
We do. And speaking of the live earlier, Nicholas in the live chat, I think he's referencing what we were talking about last week, Dan, with the secret Metallica concert. He says, you and Dan should have a live jam session on the show.
Yeah.
A fun idea. It might be a one-sided jam session because unless you count my 6th grade saxophone lessons, not a lot of instrumentation in my recent history here. Maybe I could lay some vocal stylings on top of your bass, Dan. What do you think?
Did you play alto or tenor saxophone?
I was an alto man.
I was as well.
I guess that was a 6th grade instrument of choice. So I decided lugging this thing back and forth from school to home, it's a pain in the butt. Of course, over the pandemic, I did revisit some guitar stuff. So maybe I'll have to have you give me electric guitar lessons. I could play a couple basic chords And that's about it. So I don't know how much of a lead guitar man I could be. Again, I think vocal stylings might be, maybe I could scat over your bass. What do you think, sir?
That sounds pretty fun.
I think I just terrified all of our listeners out there. Let's move away from that very quickly. A silly suggestion, but a fun one there. Mr. Nichols. Dan, before we get into today's topic, you're trading it up hot and heavy over there. We need to get a drop for this segment because it's just fun now. Something, maybe we'll call it Dan's Meme Corner. I kind of like that. But Mr. P, what is lighting up Dan's Meme Corner this week? And also, tangentially, what are your thoughts on kind of yet again another shock to the system this week, another big sell-off, another vol spike, and then kind of coming back, not quite to unch, but coming back a bit now?
Wow. Well, we just launched our options rater short squeeze finder. It literally started trading on Monday. And the first stock that it identified for the folks in our room was GoGo, which was up 40% yesterday. So that was really exciting, a really great way to kick off the options rater trade finder. A little quiet today on the meme front, but that being said, we got the VIX up at 2240. Holy moly, but I think it's up there for pretty good reason. I love these days when the VIX is still high, but the market is up pretty good. Kind of gives us some potential opportunities. Crazy market, but I got a feeling we'll talk about all that during the show.
You say it's called Options Rater or Options Trader, your new service?
Options Rater.
Ooh, I like that. Aggressive naming. I can get down with a little options rating. That sounds kind of fun, sir. What's the logo? Is it like a pirate with like a sword in his teeth? What's going on there?
Oh no, we got a cool logo. I don't think it's even on our public facing website. We kind of just sort of launched it to the folks who joined us in our webinar last week. Options
Rater. I like that. Cool name there. Speaking back to our live and our band, we have Mr. Limited. He's offering, if you need someone to play the triangle, he's a whiz. And Mr. Nichols says he's a whiz on the kazoo. So we got you on the bass. We've got me doing some light vocal stylings, and then we got a kazoo and a triangle. How's that for our jam session so far, Dan?
That will be great. Yeah, that sounds really awesome.
Sounds like a kindergarten jam session. All right, let's get away from that before we terrify more people and get into our, I guess you can call it a bit of a basic training. It's more of a nuanced one than that, but let's stick it into the old basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right, everybody, welcome to the basic training, the portion of the show where we explore a basic options concept or strategy or technique and explain how you can utilize it in your portfolio. Again, today's going to be a little bit different. Dan, we're going to rip a page here from good old Dick Wolf of Law and Order fame, and we're going to go ripped straight from the headlines. What do you think? We need that little drop now. What do you think? Can you handle that, sir?
Yeah. So we're going to, okay, now let me just get this straight. Are we going like political headlines or like stuff about the Kardashians?
Ooh, all those would be good. But no, we're going to go a little bit different. We're going to pivot into options. You okay with that?
Oh, I guess.
All right. We'll get to the Kardashians later on the show. Don't you worry. But here we go. A bunch of people had this on the brain, which again, you guys have questions, hit us up. We're always thinking about what's a fun topic for the show. And sometimes you guys make it overwhelming with your questions. You had a bunch of questions on this one. You guys all want to go rip from the headlines this week. So we're going to do that. Here's just a few of them. We had a question from Damos. He says, hello, Mark and Dan. I'm a new options trader. Have been listening to OBC for several months now. You guys have really made it much, in all caps, much easier for me to understand all this voodoo. So thanks. Oh, well, you're welcome there, Damos. That is literally the reason the show exists. He goes on to say, if I could impose upon you, I would like to ask a question about this headline I saw on Twitter. I read it through, but it doesn't make much sense to me. We have a similar question here from Mr. Min, M-I-N-N. So I'm guessing he's from Mr. Minnesota. He says, what the heck is this about? And he puts a link to an SEC press release. And then we have a question here from Alistair. He says, I'm very confused about the recent news headlines regarding the wash trades and meme stock options. I'm familiar with wash trades, but to my knowledge, they involve no real economic risk or interest. So how can an individual profit over $500,000 by doing them in meme stock options. Thank you for your time. So let's dial it back in case you missed the ripped from the headline segment this week. Listen, this is just breaking in the last couple of days. The headline that Demos was referencing on Twitter was a tweet from the SEC that says, today we charged 2 individuals that allegedly collected ill-gotten rebates. Their wash trading scheme may have impacted the market, skewing volume in certain options contracts, including inducing other traders, to place trades in otherwise illiquid options contracts. And the kind of bold print from this says SEC charges 2 individuals for wash trading scheme involving options of, quote, meme stocks that were actively being promoted on social media platforms. So this one hits on a couple of fronts. Obviously, it hits on the options front. Also, for a lot of people, it hits on the meme stock front, which is probably what brought it onto the SEC's radar out there. And as for the release that Mr. Min is talking about and links to, and also that Alistair is referencing, I'll just break it down for you here. Listen, this release came out 2 days ago, September 27th. So this is hot off the presses stuff. This is from the SEC, obviously. It said SEC charges 2 individuals for wash trading scheme involving options of, quote, meme stocks. And I'll just break it down for you here really quickly. It says the SEC today charged a Florida resident and his friend for engaging in a fraudulent scheme designed to collect liquidity rebates from exchanges by wash trading put options of certain, quote, meme stocks in early 2021, according to the SEC's complaint filed in blah, 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 blah. Starting in late February, Suyun Gu became aware of the increased market volume and volatility driven by so-called meme stocks that were being actively promoted on social media platforms. Gu allegedly then devised a scheme to take advantage of the, quote, maker-taker program offered by exchanges by trading options of these stocks with himself. Under the maker-taker program, a trade order, this is an interesting description of it. I probably wouldn't have put it this way, but this is how the SEC puts it. He says, under the maker-taker program, a trade order that is sent to an exchange and executes against a subsequently received order makes liquidity and generates a rebate from the exchange. In contrast, an order that immediately executes against a pre-existing order takes liquidity and is charged a fee. The SEC's complaint alleges that Gu was able to generate illicit profits by using broker-dealer accounts that passed rebates back to their customers to place initial orders on one side of the market and then using broker-dealer accounts that did not charge fees for taking liquidity for his subsequent orders on the other side of the market. When identifying a product to trade, Gu and his friend and business associate, Yang Li, selected far out-of-the-money put options on some meme stocks, which they thought would be easier to trade against themselves because interest in buying the meme stocks, they thought everybody wanted the calls, which they do, would make the puts less attractive. And so they thought it'd be easier to trade them and maybe no one would notice. Unfortunately, it was exactly the opposite. After certain broker-dealers closed Gu's and Lee's accounts in early, this is what cracks me up. They already got caught once in March. They closed their accounts in March of 2021. Gu was able to continue the scheme through mid-April by lying to broker-dealers about his trading strategy, using accounts in the names of other people, and accessing these accounts through virtual private networks. He used a VPN to tunnel in to hide his identity. The complaint alleges, and this is what Alistair was talking about, the monetary amounts. The complaint alleges that Gu executed approximately 11,400 trades with himself, netting at least $668,000 in liquidity rebates, and that Lee executed approximately 2,300 trades with himself, netting $51,000 in liquidity rebates. In addition to collecting these ill-gotten rebates, the wash trading scheme allegedly impacted the market as it skewed the volume in certain option contracts and induced other traders to place trades in otherwise illiquid contracts. They say that they engaged in a deceptive wash trading scheme to game the exchange's maker-taker, take advantage of market conditions, blah, 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 a bunch of judgments. They've already got a judgment against one of the guys, so they have him pay all the money that he made, $51,334, plus $515 in pre-judgment interest and a civil penalty of $25,000 on top of it. So he's not making any money, but he was kind of the secondary party. The main guy sounds like the SEC is still in litigation on this. So Dan, a lot to unpack here. I'll let you take the lead because it's literally in your name, market taker, what they're talking about here. So A, did you notice this story? Did you see these headlines? And B, what are your thoughts here in terms of the questions from Alistair, Mr. Min, and who was the other one? Demos. They want to know, WTF, sir, what's going on here?
Oh, man. Well, I will point out that is a use of the words that happen to be next to each other, market taker, in a much different context. So let's just put that out.
Oh, your whole system's not about collecting fee arbs, sir? I mistook it all. I'm sorry. I have to redo the whole show now.
No. Now, I mean, it's interesting, right? Because I wonder, yeah, I mean, this is one of those areas where it's like a very, very esoteric part of securities law. And I wonder which parts of that are illegal. And I'm not a legal expert on this. I'm pretty sure that wash sales are illegal because they don't really serve an economic purpose, although this guy figured out an economic purpose. And it was the brokerage industry that got hurt. So that ended up being enforced. And yeah, he's clever. I'll give him that. He's clever. Yeah, but there are a couple of things I'll say. One is, if you ever find some like brilliant idea where you can kind of like squeeze a little bit out of something, maybe it is a brilliant idea, but if it seems a little like gray area or something, you should probably talk to a lawyer. And you don't need to talk to a lawyer to know that you should not open accounts in somebody else's name. Like, it should be pretty intuitive that you can go to jail for that. So that's a pretty terrible idea. Lying, I have a thing with lying, just lying in general. I don't like it, right? But, like signing documents, like legal documents, and lying on there and signing somebody else's name, like, that's a terrible idea. Why would you do that? It's a terrible idea. I mean, yeah. I mean, just work a little harder to get better at trading, and then you don't have to cheat the system.
Yeah, this guy found a bit of a nuanced way to do an end run around it, but you're right. It is probably the wash sale part that got him caught. Also, obviously, opening up effectively false brokerage accounts. That's also going to get red flags for you from the SEC and from FINRA. So this guy's stepping on a lot of toes. The things that cracks me up is that they got caught already in March, and they kept trying to do it using VPNs and everything else out there. Once you know they're onto you, maybe you dial it back. But no, this guy doubled down, said, I'm going to keep doing more. So how did they make this money? What the hell's going on? Because Alistair's right. Wash sales usually are just that. You're buying and selling the same thing. You're not really making any money. You're not really taking any risk out there. So what are they talking about? This is kind of taking advantage of a bit of a nuanced part of the options market. And it also exists in the equities markets as well, that we don't really talk about here on the show because it's kind of arcane minutia, but sometimes, as you've seen, it could be exploited to great effect. And this is, of course, the maker-taker and taker-maker. These are different types of effectively fee models to try to incentivize liquidity on different exchanges. And so exchanges discovered a while ago that, maybe we ought to incentivize people to come in here and make markets and make better markets and improve markets. So if you come into one of these exchanges that has a quote unquote maker-taker model there, then if you come in and you, let's say, make liquidity, you post an offer on XYZ 100 calls and you offer it a 10 lot, whatever, at 25 cents. You have posted that offer. If that sits there, nothing happens. But if someone lifts that offer now and trades with you, guess what? You made liquidity. So you are not only getting filled, but you should, it depends on that venue. And of course, this gets into where you route your orders, which broker you use. Does the broker pass those rebates along to you, or do they pocket them themselves? A lot of different nuances you have to figure out to do this. You have to have a BD account that will pass it along, which they said they had. And then also that you make sure you route your orders appropriately. You have to route your orders, the opening ones, to a maker-taker exchange, and then route the closing side through a venue that doesn't charge any sort of fee for taking liquidity. And then you have to have both sides of that equation. And then you can collect the rebate to make liquidity. You're making liquidity with yourself, so there's no real trade going on. And you're not getting charged to close it in terms of any sort of fee outside of the commissions, obviously. So the net result is you're collecting these rebates. And it depends on the venue, depends on the name, the time of day. All these rebates change all the time. But if you find one that can pay a juicy rebate, as you've seen, you can arb that and collect that. And that's what this person or these people were doing out here. Again, it's not something we talk about a lot here on the show because it's not that viable. To do it the way they're doing on scale is pretty much highly illegal. So it's a lot of reasons why we haven't talked about it on the show. And also getting back to the options impact for us here on the show. This is why we always caution you on shows like Options Oddities, or even on our Odd Block segment of the Option Block program, that, when you're seeing unusual activity go up, it behooves you to dig into. Like for this case, you probably saw a ton of puts. I don't remember the names that they were trading. They're not listed in the complaint. I'll have to go dig it up and see. But in these names, you saw a flurry of put activity on these strikes. And you might have thought, hey, wow, someone's gobbling up these puts. Someone's really spooked about the downside in whatever it was, GameStop, AMC, I'm not sure. And that could have induced you to say, hey, maybe I want to follow these guys and they're doing size. They must know something. And so I want to buy these puts too. And so that's what the SEC is talking about with the inducing other traders to join in when maybe it was just non-economic activity at the end of the day. So we always tell you, first off, the size money is not the smart money when it comes to huge activity. Just because you see a 10,000 lot going up doesn't mean that person knows something. Listen to any of our shows where we track this unusual activity. A lot of it does not work out very well, particularly of late. A lot of the meme stock call buying, out of the money call buying hasn't really been that great. Just look at all the people who were loading up on 15, 18 and a half and 20 calls in Ford. Didn't work out too well. Just bear that in mind. You're seeing these big prints go up and these weird names, and a strike doesn't make sense. A, hit us up. I know a lot of you do. Say, hey, I saw this weird paper. What does this really mean? And then B, once you get a little bit more knowledgeable, you can do the due diligence yourself and say, hey, you know what? These look like maybe wash sales going up or something else weird that it isn't really indicative of some sort of economic interest here. So I really shouldn't. It's kind of like effectively talk about those dividend plays a lot. People use dividend arb to try to capture these dividends. And there's hundreds of thousands of contracts going up that represent absolutely no economic activity whatsoever. So those distort the numbers, and this type of trade can do that as well. Dan, any other thoughts here on this funky and esoteric rebate arb scam, sir?
Yeah, I mean, a couple of things. One is it doesn't seem to me from what we read here that he was trying to entice any other trading. Like, he may have inadvertently enticed any other trading, but I mean, if I wanted to buy like 1,000 at the money calls because I thought the stock was going to go up, like that might cause somebody else to jump on. But, my objective is to make money as the stock goes up. So it's weird that they're throwing that out there. I think
they're trying to obviously find a victim, right? That's what they're doing. They're saying, hey, they could have induced some other folks to follow. Obviously, that wasn't their intention. They didn't do it for that, right?
Yeah, trying to pinch the little guy. But also, like, I have heard that market makers occasionally will do this. And there was, like I said, we've got this scanner called Options Radar that just went online yesterday. And one of the trades that hit it today was a pretty slow day for it, but one of the trades that hit it was in Greenridge Generation Holdings, GREE. And I looked at it this morning and I'm like, what is this? Like, there were 1,000 of the October 1st, which expires in 2 days, 29 strike calls that traded at an average price, like right around the open, I think on the opening rotation, of 9.5 cents. Now, for anybody who's listening to this live, go and pull up an option chain right now. If you're, unless you're driving, don't do that if you're driving, because the 29 strike is offered at a nickel now, so 4.5 cents lower than somebody bought these. And the stock is one of these, like, there's a corporate action. So I think the true underlying of it is actually $14.32. So it's a little bit kind of funky. But every single strike below the 29, every single call strike below the 29 strike, all the way down to the 6th strike, is all offered at a nickel. Oh, so obviously the underlying is not 14.32, but either way, every strike offered below the 29 strike is offered at a nickel, all the way down to the 6th strike. So somebody bought like 23 strikes higher than they needed to and still overpaid somehow through the offer.
Kind of like those AMC 145s. It has a whiff of those.
Yeah, like it just, this is a trade that just doesn't make any sense. It's what I refer to in our boot camp as the dumbass trade, because if you follow volume, which is a big part of what our system does, if you follow volume and you jump on this, like, oh my goodness, you're making a horrible mistake.
Yeah, that's why we tell you, be careful out there. So again, we've already spent a lot of time on this. It's a wash trade. It maybe the legality of it is kind of dubious out there. And it's not something most of you can or really should replicate, lest you want to fall into the ire of the SEC and FINRA out there, because clearly they're watching for this kind of stuff now. But it's something a lot of you were clearly confused about, so we wanted to at least set the record straight on this. We got Unlimited in the chat saying, Mark teaching me how to do shady wash sales, making me feel like I'm reading in the restricted section library of Hogwarts. Yes, I'm currently reading through Harry Potter for the first time myself with my son, so I get that reference now. That's a good one. I like. Yes, this is maybe more of the restricted section. Maybe we're telling you a little bit of defense against the dark arts, dare I say. So when you see this out there, you could defend yourself again. That could be a good segment for our show. I'm sure the Hogwarts people and Pottermore are not litigious at all if we were happen to just borrow that for a name of a segment, because I kind of like that. Meanwhile, though, we got to squeeze some more of you on here really quickly. Let's get out to a real quick mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's see how much more shady, forbidden business we can get into here. I'll skip the big question of the week we had last week with you folks. That's already behind us. And the true answer was obviously below 20, even though it was a tie between 20 to 23 range and less than 20 at about 30% each. Let's move on to our question of the week this week. Dan, you kind of partially inspired this one because you're such a straddle fiend now. We said, hey, straddles have a bit of a mixed reputation in the options world. Some love them while others hate them. Quite simply, do you trade straddles? We gave you 3 choices. We always like to give you a little bit of a curveball, not just yes or no, but something a little bit different. You said, yes, I love them. No, I hate them. Or I prefer flies/condors. And so far, Dan, you're winning with yes, I love them, 48.3%. That's a surprising, more than I thought. Followed by no, I hate them, 24.1%. Actually, number 2 is I prefer flies and condor. I thought that would be a little bit higher. That's only 27.6%. A lot of people chiming in with their thoughts. This handle, Salty McSalty Balls, says not as much as he likes them, not as much as a covered strangle. Okay, I'm with you. J4340 says strangles, yes. Straddles, generally no. Okay, I can see that as well. Age of Delaquaria says selling straddles, nope. Unlimited upside risk on the naked call. Buy straddles, nope. I don't take trading advice from infomercials. Yes, you've been listening to some of our earlier episodes I see there. Flies and condors, yes. So, Mr. Dan, your new favorite strategy, the straddles, getting some love. What do you think, sir?
I think that's great. I'll tell you what, man, I've been doing this a long time, just like you, Mark. And straddles, I would normally tell people straddles are one of the hardest things to trade. You know, they're very, very specific niche. Probably stay away from them. But I'll tell you what, man, this last year, found some really good candidates. They're out there. They're not as hard to find and not as hard to trade as they used to be. That's for sure.
Yeah, that's indicative of how crazy a year and a half it has been. When suddenly straddles are actually profitable to trade on the long side, sometimes it's a bit of a weird and wild year because that is usually not the case, particularly for a lot of retail accounts out there. It's really hard to trade long straddles profitably over time. And yet we have seen more and more evidence of that since the pandemic began, which again, indicative of the crazy times out there. Let's get on out to this question from Lido. Lido wants to know, what was the best thing about learning to trade options as a market maker versus how people learn today, which is on Reddit? He says, just kidding. The smart ones learn from shows like this. Well, you're not that wrong. A lot of people listen to this show, but also a lot of people hang out on places like Reddit where the information can sometimes be less than stellar out there. But Mr. Dan, you were a market maker. What are your thoughts on learning that way versus the way folks learn today, sir?
Yeah, it sure is different. And the style of trading is different too. The one advantage to learning as a market maker, though, is that like you really get down to the nitty gritty. It's kind of the difference between learning how to drive, in driving school when you're 15 and a half versus going to engineering school and taking apart engines and putting them back together. Just getting to know all that, especially the inner workings of volatility and market mechanics. Like those are two things that anybody can benefit from, but market makers have to know it because it's literally their job. And so that's the one thing that I try to pass on to our students is is that stuff, just getting really into the nitty gritty of volatility and market mechanics so you can get better fills. And then that combined with, all the typical retail information can be really, really powerful.
Yeah, for me, I've always alluded being a market maker to kind of like immersion training for learning a language. It's one thing sitting there and doing your Rosetta Stone and learning at home on your own. There's another thing just moving to Italy and saying, I'm going to learn Italian that way. You have to sink or swim because you have no choice. You have to be able to get around the country. You have to be able to, order groceries, go to the bathroom, whatever the case may be. So you need to learn the language. A market maker was something similar. They kind of just threw you into the deep end of the pool. Obviously, they trained you extensively before they did that. So you had professional grade training. But on top of that, like Dan mentioned, you got to see the inner workings, the inner mechanics of how these things really work in the real world in real time. And these were all positions that were thrust upon you. You didn't want them. You didn't go out there saying, hey, I want to buy puts in whatever, the S or Intel, whatever the hell you were making markets in that day. The customers came in and they just did what they wanted to do. And you had to take the other side of it and then somehow get out of it and make money doing it. And so it was a fantastic problem to have thrust in your lap. Back then it was a little easier. Markets were a little wider. You had the ability to get in and out of things a little bit more. But still, it was a fascinating puzzle every day. You had no idea what was going to come at you. And you saw how they performed in real time because you had no choice. So it was very much the immersion therapy type of training versus now, again, you kind of scattered around looking at some message boards here or there. You get a smattering of information here. You get a smattering of information there. You don't really know what's right, what's not, versus, again, pro level, pro grade training and full-time immersion to actually see it. It was a very different beast. And again, one that's kind of hard to replicate these days. That's why it's good if you do want some education, go to people who were market makers. That tends to help because at least they have that insight into the business that is hard to gain in other ways. Let's do a couple more here, then we'll kind of wrap it up here. You got Mikey. Mikey says, hey, Mark, just wanted to say thanks for the recommendation on the OIRN app. That's our network app, listeners. So I checked it out after the show last week, and I've been mainlining it ever since. I can't believe how many shows you have on this thing. My commute is going to be full for many years to come. Amazing. Well, thank you, Mikey. We had a listener ask last week about how to get the archives of the show, and we mentioned the website, but also the best way, really, I think still, is the app, because that comes straight from our online network distributor. There's no middlemen in there. Doesn't have to be converted to our website formatting, anything like that. It's just straight in the app. So you can get everything. You can build your own playlists. We still recommend that. It's a great way to get all the stuff. And it sounds like Mikey likes it. So if you're checking out, I like that. Mikey likes it. That's the old Life commercial. Life cereal there. Mikey likes it. But yeah, if you want to check out, follow Mikey's lead. It is a great way to get everything that we do and have no middlemen and be able to get all the episodes, all the archives, including that'd be useful for our next question here. Predictable with an 8. Predictatable says, loving the Options Bootcamp show, guys. Big fan of the Greeks and Dan's book. Well, there's no accounting for taste, at least for the latter there. He says, can we get an episode on the second order Greeks as well? Well, you're in luck, Predictable, and everyone else out there who wants that. If you use our app or go to the website or go anywhere else that lets you get access to the archives of this show, if you go back to episode 59, we did just that. Episode 59, Going to the Dark Side with Second Order Greeks. So you can have a field day. Chances are, if you have an options question, we've discussed it somewhere in the archives. Dan, anything you want to add here on Second Order Greeks and the fact that Predictable actually likes your book, sir? Again, no accounting for taste.
Well, thanks for reading it. And geez, Mark, you either have an incredible memory or an extremely organized system, and either one would be pretty impressive.
I have good producers. That's what it is. They find this stuff for me. I'm just a pretty voice on the radio, sir. All right, everybody. That music means it is time once again to bring, unfortunately, this movable options feast to a close. Again, you folks have all sorts of questions and comments. If you're seeing stuff out there in the broad financial media that doesn't make sense, like we had this week, hit us up. We'll be happy to walk you through it if it pertains to options. If it's some weird nuanced thing on corporate bonds, for example, probably go elsewhere. But if you want to hit us up with your options related weirdness and arcane minutia, we're happy to walk you through it. And of course, all the other questions you folks have. These are crazy, wild times out there. We understand why it's still intimidating to learn about these products. We're here to help. So hit us up. Let us know. And of course, if you want to go deeper with your questions and answers, head on over to theoptionsinsider.com/pro. That'll get you access to the live, as well as, of course, the exclusive stuff. The pro Q&As have been just off the charts awesome. So you got to check those out. If you missed those, of course, if you sign up for the pro, you get to have access to all the back ones, so you don't miss them. Once you sign up, you get access to all the ones we've already done. And, of course, you can participate in future ones, which are certainly fun as well. And, Mr. Dan, if folks want to check out the very intriguingly named Options Raider, where should they go? What should they do, sir?
I usually like to have a little short link to make it easy for you guys, but I didn't think about it today. You can go to danpassarelli.com/mm-options-raider-RPL for short for replay, and there's a whole video on it. So that's those of you who are watching this on recording have an advantage because you can stop and rewind, but it's danpassarelli.com/mm-options-raider-RPL.
That's a mouthful. We'll have to get a better link for next week. But in the meantime, it's a cool name. Check it out over there. Options Raider. If you want to do some options rating out there yourself. That's going to do it for our live today. Hopefully you enjoyed the Advisor's Option, an extra dose of content for you today on Education Wednesday. And, of course, your live dose of Options Bootcamp. Got Brian coming up a little bit later today, live to tape for Options Playbook Radio. I'm going to see if I can get him back onto a live huddle again for you folks listening, so you can get him back on the live network. He's always fun to pick his brain as well. Then we're back again tomorrow, of course, with This Week in Futures Options, episode 2 of the Option Block, Friday for volatility views, and of course, for all of you pro folks, come back at 2 p.m. Central for Options Oddities, where we talk about a lot of weird, crazy stuff. You guys are already lighting us up with requests for what you're seeing out there that is weird and wild, so should have a fun one in store on Friday. And then back again next Education Wednesday, another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.